Trade war crashes global markets. Time to identify opportunities. Hey guys, it's Keith Allen. Oh man, what a day. What a way to start the week. There's a lot of ways to look at this, and I'm looking at this as a time for opportunity. The whole world knows who's responsible for markets crashing. There's no question about that. And but pointing fingers at the orange guy and saying, I told you so, it doesn't really help us navigate the volatility. So I believe that thoughtful analysis is the way forward on this. And so I hope that you're not panicking, even though I know a lot of people are. I hope that you're not panicking. And maybe if you've been in this market, maybe if you haven't been in this market very, very long, you are panicking. But if you have been in this market for a while, you probably know everything's going to be okay. So we're going to climb into this and see if we can make sense of it, see if we can find some opportunities. I'm coming off of a great birthday weekend, went out and did some fishing yesterday. The fish were much kinder to me than the market was when I came home, but you know what? That's all right. I'm looking at this as another gift, cheap Bitcoin. But there's a lot going on, obviously, right? Is the bottom in yet? That's everybody's question. How low can we go if it's not? And where are the opportunities for generational wealth? That's what we're going to climb into in this analysis. If I've learned anything after 7.5 years of investing in Bitcoin and trading alts, it's that we have been here before. And this is not a time to panic sell. It's a time to look for opportunities. So we're going to look at just that today. We're going to climb into the charts. I'm going to show you where the technicals are pointing to. I'm going to show you how liquidity in the order book stacks up relative to those technicals. And we're going to see if we can identify some opportunities to capitalize on what's happening here in the market. So, as per usual, before we start, just want to invite you, if you haven't done so yet, to smash all the buttons. Make sure you hit that subscribe button, especially that little bell up top on the YouTube channel, so you don't miss any of the future streams. Of course, if you're watching on X, subscribe to my channel there as well, and you won't miss any of these in your feed. I would say that, also live chat. So if you've got questions, we'll do my best to answer them. If you have insights, I certainly want to hear them. And if you've got some coins you want me to look up, I may even entertain that for a few. So let's go ahead and climb in. First thing I want to do to rip the Band-Aid off of this thing is start sharing some screens, and we will. Oh, you know what? Let's right. I'm starting on a positive note. Big day yesterday. This is actually I think my personal best peacock bass. Out with my brother yesterday. Had a great time, and that was a great way to celebrate the birthday. But came home obviously to what was happening in markets, and that got me looking at a lot of key metrics. And one that I looked at very closely, the first thing I came into was this one, the RSI on the weekly chart. And as you can see, I've got this level here marked, and this is my line in the sand for the market. So keep an eye on that, right? We were earlier today, we were nosed literally right down to this line, and it's reverted from that. So something I want you to keep in mind, especially when you're looking at technical analysis, it's not where you start, it's where you finish. And what I mean by that is don't react to the volatility when things wick through. For example, so I'm looking at this on a weekly chart. It doesn't matter if we wick down below this line. What matters is that the weekly closes above this line. And so far, we're holding above it. Does it bother me that we are testing this? No, it does not. In fact, I am glad that we're retesting this, because this is how you validate markets. This is how you validate support. And now there are some things that are interesting here that indicate that, hey, maybe the bottom isn't in yet. But there are also some things that point to the fact that we may be at some levels that are worth considering for a buy. Picking bottoms in this environment, especially, listen, in any environment, picking absolute tops and absolute bottoms is very, very difficult to do. Which is why I employ a dollar cost averaging strategy, a DCA strategy, to build my long-term positions. And I've been building my long-term Bitcoin position since all the way back in the FTX crash back in 2022, when we were trading in that, down here in that 15.5 range. And so, Unfortunately, I didn't keep as much of this as I wish I did now, but I do have a little bit from here, and 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 so on. So my average entry, after a little bit of how should I say, um, trailing stop losses here the past few days. I've had some positions that were profitable, and I could have taken profits higher, and probably in hindsight would have been a good idea. But I felt like they were going to go. I felt like those were going to stay with my longer term position. My only interest in trading is to rotate into better positions that might improve my cost basis. So at this point, my cost basis is again below 50K. Um, my average entry below 50K, so I'm happy about that. And I'm going to look to improve on that. I did pick up a little bit here at this level, and I'll tell you why. I had these orders set because I was out, right? And I was not watching charts very closely. Had I been here yesterday in front of the computer, I might not have let those orders fill, but they did, right? And I'm okay with that. Because I felt like the trend line was a good place to buy. I felt like the potential of going to this area was a good place to buy, and we did. Now, the one thing that I don't like here, that I especially don't like here, that makes me think that we could see more downside, is this lower low, right? We had a lower low in last month, I guess, almost a month ago, that took us down to, at least on this exchange, down to 76.6. And we've now breached that, went through even 75 down to the 74.4 level. So this to me kind of cracks the door on potentially going lower. If we go lower, where might we go? Good question. So a couple of things come to mind. And the one that immediately comes to mind, we've heard people talking about 70K. We've heard people talking about 65K. We've heard 71 to 73K range. All of those things are valid for some reason or another. All right. And I'm going to tell you why. That 71, 73K range is valid. And I'll show you why that's valid. Let me find this chart here. If we've recently started playing with a new indicator that my partner Fred developed called Timescapes, and this basically marks quarterly and annual opens. And there seems to be something about those quarterlies and those annual opens that resonate. And if we look through history, we have a period of time where, well, this goes back to when was this one? This one was the Q1 of last year, April 2024. And this puts some, I would say, some validity on this range, which is in that 71.5K range. Now, in my opinion, well, number one, I've noticed that these will overshoot, right? But then they snap back pretty quick. But in my opinion, if we go this low, if we go as low as 71, then I think that price is likely to do the full retrace to where the so-called Trump pump began on November 5th, which was election day. And that is this 69K. Now, am I saying this just because that's where the Trump pump began? No, I'm not. I had this target set since, the fact that it was the 2021 top is why I set this target here, right? And so that remains a target. We traded around this range for a very, very long time, from when we first cracked it in March of 2024 until we broke it on election day. So this level brings a lot of weight to me. I think this is the strongest RS flip on the chart. If you have listened to the stream for a while and you go back in time to before the election, I said many, many times, if Trump wins, I expect a spike in price Price is going to rally, markets are going to rally, and then there's going to be a correction, and then things will level off, and Bitcoin will get back right on to the trajectory that it was originally on. And I said the opposite of Harris. If she had won, I thought that markets would dump, stabilize, and then find their way back up. Well, we'll never know what that scenario would have actually played out like, because it didn't happen. But we're on pace to see this thing do a full retracement, and that would not surprise me. Now, what I don't like about that is if we go much lower than where we are, this might break my RSI line that I just shared with you a moment ago, right here. So I like the range that we're in, that 75K ish level, and we've recovered from that briefly. So this morning, this line, as I shared with you a few minutes ago, this line was really on a downward slope. It was continuing just on this trajectory, and was sitting right here. It's now recoiled a little bit. So I'm watching this very, very closely. And again, if it wicks down here for a few days, I'm okay. What I want to see is by the weekly close, we're back above it. And so that is something I'm watching very, very closely. And I suggest you do too. Now, I've heard 65K as a possible target. And you could build an argument for 65K, similarly to how you might build the argument for 69, with a major exception. 65K was actually the mid-cycle top back in 2021 before we had this rally back to the all-time high. And a lot of technicians consider this to be the actual, excuse me. Wow, tough day, long night. A lot of technicians actually consider this to be the cycle top of the year, or of that cycle rather, and that this was a manipulated relief rally that obviously took us to an new all-time high. That's entirely possible, and that would put some validity on this level at 65K. And we did have some consolidation around there, but I personally think that the 69K is technically stronger because of the amount of time, in part, both because of the amount of time that we spent here retesting it before flipping it, and also because that's the magic number, the magic level that was RS flipped on that November election, which, as you can see again here, was right here. November 5th, election day, is when we actually flipped it. So that's why I've got eyes on 69K. Maybe it gets front run. Maybe we don't make it there. Hey, maybe we see some negotiation on tariffs and this changes now. But I would encourage you to really not focus so much on the news that you're hearing, because it changes every 10 minutes. And quite frankly, you don't really know what the truth is coming out of the administration. I mean, a week ago, they said these are non-negotiable. And then, they immediately start negotiating. I've been saying since, for over a month, actually a couple months, that these tariffs were negotiating tactics from Trump. And some of them may stay, some of them may go, some may change, and that remains valid. So just know that part is fluid and going to continue to change. And some positive steps would obviously, the market would respond to that. Now, I think that the president was thinking he could bully Fed Chairman Powell into a rate cut. And, he knows that the market would respond positively to that. But the chairman isn't going to cut rates just based on what the president, quote unquote, wants. He's looking for hard data of how the economy is really surviving. And the economy has been strong. Now, this is a huge kick in the teeth to the economy. And especially when you see a social media threat back and forth between China and the U.S., where China retaliated with 34% tariffs of their own. Trump said, if you don't take those tariffs down this week, then we're going to retaliate with another 50%. And guess who that's going to hurt? That's going to hurt everybody in the supply chain. Okay. I can tell you that my wife works for a company that manufactures products in China, and these tariffs hurt them. These are a real challenge. Now, their whole industry is facing the same thing. So it's not that they're going to have a price advantage or disadvantage, at least not a significant one. But it is definitely something that trickles downstream, creates problems for them in terms of their cost of goods sold, creates problems. People don't think about things like, hey, pricing catalogs. Well, there's a time and expense factor that goes into creating a pricing catalog. And when a company creates that, and then they have to change it, and then they have to change it again, and then they have to change it again, they can't operate like that. So what do? They just, they don't do that work, or they tell their customers, sorry, prices are no longer valid. And nobody wants to hear that. So it dials back spending. People get nervous. They wait for things to settle down, and it's not good. Obviously we're seeing the ripple effect happening through the U.S. economy, but even at a grander scale on the global economy. So yes, everybody's rushing to kiss the ring and work a deal with Trump, which is what he wants. But there's a lot of pain and suffering going on in the process. Probably unnecessary too. Much of it is unnecessary. It's a self-inflicted wound. So I told you we would look at some opportunities here, and I felt like there was something else I want to share with you, and maybe that'll come to me before we're all wrapped up here. But so in terms of where I'm looking to add to my position, like I told you, I did add a little bit here because the trend line was important to me. And I did add down here because I felt like this is an important key level structurally. This matters. If we continue to go down, if we really rally out of this, but I continue to see weakness, then I'll sell what I purchased here and rebuy back lower, because I do think there's a chance that we go down here. Now, what happens if price breaks down from this level? I think at that point we might have to say that this trade war could potentially break the cycle. It's still intact at the moment. And now I remember what I wanted to show you. And let me add some of these things back in. Yes, it's still the cycle is still intact. The bulls and so the bulls can run again. Just because we're seeing this downward pressure and we're seeing price pull back in a big way is not a reason to think that it's over. And so don't believe the hype is what I would tell you with that, right? So let's go back and see what I was trying to share with you here. I probably added too many of them back in, but what I want to show you is historically we have seen big corrections in bull markets time and time and time again. The colors changed on me a little bit. That's what's throwing me off. But as you can see, since the beginning of time, there have been lots and lots of large corrections. And I've got some in. I'm showing you both sides here, right? What happened after that? What happened after this 39%? Well, we got 2,200% to the upside. What happened after this 75% correction? Well, we had huge 1,500% up, 1,700% upside. Am I saying that we're going to have another 1,000% run? No, I'm not. I think those days might be over for Bitcoin, but I do think that there's room to run here. This is a 51% correction. And guess what happened? Price ran. And so seeing a situation that we're in right now, right? Here's, what's this one? 39%, 34%, 41%. Okay. Big corrections happen in this game, and they have always happened, and they will continue to happen. So what does that mean for us now? Where are we sitting right now? How big do you think this correction actually is from the all-time high? I got news for you. Might not be as big as you think. Certainly not as big as some of the corrections we've seen historically. At this stage, we are, yes, that should be red, I know. But at this stage, we are not even 32% from the all-time high. And so that 40% move would take us, even if we went to 69K, that doesn't even get us to 40%. So, and 65K does. 65K gets us to that 40% level. All right. So all of these things are on the table. None of them mean it's over. Yes, it's disheartening to see the structure broken like this, right? It's not what you want to see. Um, there's actually another structural piece in here. Let me see if I have this close by. If I can find it. There is another, our original trend, and I have it drawn, so I'm going to look for it really quickly and see if I can find it. Otherwise, I'll draw it again for you quickly. I'll just draw it again. Our original trend was lower than this, but we revised it once we took off here in September. And I know I have it on another chart. I don't like to redraw lines, but I'm going to show you this so you can maybe have some bearing on it. And to do it, I'm actually even going to go to the line chart because this is how I like to draw my trends. Let's enlarge this a bit and see where we're at and see if this trend lays up any differently than the trend that we're on now. Okay, so we go from the bottom here. We go from here. Oh, that's not the right one. Sorry, guy. We go from here to here. And that does actually take us lower. Now, I revised this back in September because the trajectory changed significantly. But this is actually might give you a little bit of comfort in where we are. Okay, so keep this in mind. It is. Let me just fine tune this a little bit. I would say right there kind of works. And so there's a possibility that this becomes the trend, right? We go back to that original trend from where things really started back after the FTX crash. So keep that in mind. The bottom likely is not in, but if we go off of this trend line, we do have some structural integrity. And as I just illustrated with you, there have been so many examples of much bigger corrections than what we're dealing with now that I don't want you to panic over these corrections, right? This is something, quite honestly, I called for all year long. For a year and a half, I said we need to see those 20 to 40% corrections, and we hadn't seen them. We still haven't seen the 40%. It could be coming. Like I said, live chat is open. Alex, good to have you with me. Yeah, I did have a great birthday. I appreciate it, man, and I appreciate the support and all the kind words you guys have shared with me on socials and in the community. That's been awesome. Let's look at something else. Guys, because I realize I'm very Bitcoin centric on these analysis, but there's some other opportunities out there that I want you guys to be aware of. And one is with ETH, right? ETH has been broken. ETH has been ugly. ETH has been just getting hammered after a double top up above that 4,000 level. It's just been bleeding bad. And so look at where we came through. 1,500 has notoriously been a good level for ETH. And if you go back in time, you're going to see time and time again where that level was important. But look at this. The 2018 top is down here in the 13/8. We haven't gone there yet. And there's a possibility that we could. So 1,500, that's right here, right? We're right around that level now. And it's been a strong level for a long time. If you're not comfortable with this level, or maybe you want to dollar cost average your way into a position, then the way that I like to do that is I place my ladder of bids and I scale the size of them accordingly. So my smaller entry would be here, and then I'd make a larger entry here, and then I'd save some powder in case we go down even lower, and then I'd set one here. Okay, so this way you're scaling in, you're not aping in or going all in at one spot. And of course, if it recovers from here, then you have an opportunity to say, okay, well, I'm going to add to my position because I'm confident that it's recovering, and I'll add to my position as things, as we break resistances, or we test resistances, or better yet, on retracements from testing resistances. So on the way up, there's going to be a test of resistance here at the 21-day moving average. So that's potentially a spot for you to consider watching the price action. Is there a rejection? And maybe on that next support test, you add to your position again. And so your first entry is maybe 10 to 20% of your overall position size that you'd like to build, and then you add from it there. So what have we here? Alex says, ready for corrections. Yes, absolutely. How do I think about Litecoin? Glad you asked. Litecoin is a coin that I like, but it hasn't been treating me so well lately, and we're going to get into that one here in a second. I just want to finish up what I'm working on here on ETH, and let's look at ETH BTC really quick. This is one that is interesting to me, and I'll be honest with you, I don't trade this, or at least I haven't in the past, but I'm interested in doing so now because it's a way for me to print some more Satoshis, right? If I trade against Bitcoin and this does well, then I'm going to end up with more Bitcoin. And so looking at where we're at now, I thought 16 is really where we have the most structural support from here. So that's at 1639 is where I'm at. So I'm looking for this opportunity, and if it comes, I'm going to take it. If there's a further breakdown from there, I would probably, I would set a stop loss on this order, pretty tight one, because I don't want to lose Bitcoin. But this looks like a pretty solid place to me, in my opinion. Litecoin. Alex just asked about Litecoin. Litecoin, here's a coin that I like, and I like it because there's some fundamentals on Litecoin that it's actually being used. It's actually got historical uptime. It's got good speed. There are some real live, real world use cases where it's being used on payment platforms. And so I think that Litecoin has potential to do well. I have been in and out of positions on Litecoin. And at the moment, I actually took an order last night, I think, and already stopped out of it because things broke down further than anticipated. So at this point, I'm going to watch Litecoin and see how the momentum is shifting. There was good support. I was looking at it in fire charts the other day. Oh, by the way, we haven't looked at a Bitcoin one. Here's a zoomed out view of Bitcoin. I had posted this earlier on X today, and you can see some depth in this bid ladder is good to see. Let's look real quickly at Litecoin and see what it looks like on the order book. See what liquidity is looking like, and see if there's any reason to load up here, or maybe wait a little bit. And as you can see, there was strong support up here just a few days ago, and it's gone away. And so things broke down. We now have support at this 65K level. I'm not convinced that it's done here. Let's drill in a little bit here and see if we can get anything more granular out of this. Okay, so we do see some support strengthening here. It's not a lot of liquidity in the order book for Litecoin. I'm not going to lie to you. It's pretty low. That's only $1 million right there. Aside from that, there's some, a little bit of laddering below it, but there's very, very little, almost nothing above it. So when the sentiment is there, it's going to climb. We have seen some whale buying come in at this level, right? This is at around that 65K level. So if there's a retest here, a retest of support, I may start rebuilding this position in this range. But I do think we have more uncertainty ahead of us. If Trump starts negotiating, and look, we just saw an uptick in price here and an uptick in buying from the green order class. If Trump starts negotiating on these tariffs, things are going to start to soar, I think. Let's look at Doge on the MTF mean reversion indicator. Has been doing pretty well. These deviations are set at 3%, and you can see we're getting. If you're not familiar with mean reversion, it basically means that price likes to snap back to mean. This is a fib-based mean reversion indicator. The white line is zero point 0.5 fib. That would be mean. And anytime that price deviates from that, it likes to snap back. So you can see we dollar cost average this position here. You can't really plan for a dump like this that goes this deep this fast. So when I'm using this on my bot, I have just very small orders, and we're just dollar cost averaging the whole position. But I actually like to set up a grid that runs a range of deviations so that I can scale my dollar cost averaging. Right, I can put larger orders on larger deviations, and so if we go down again and again, we can see that. So this was Dev 3 up top. This was Dev 4. This is the Dev 6 didn't print anything. Dev 5 gave us really a perfect bottom there. So this is the benefit of adding a range of deviations on your mean reversion bot if you're going to do that. And you can just turn off the ones, and when things start getting really spicy, you just turn off the lower deviations. Simple as that. But I wanted to go over to the Solana chart. Solana also one that is getting to an interesting level here, right? We're to the trend line, wicked below it. This to me is really a potential buy zone. So the fact that it is way below now, I've done this. I had that 41.5 level on the Bitcoin chart. This is a little bit different. All coins do not react the same. I've played with this a little bit on Solana, and I come up with a level of 39, and we're under that. So I'm probably at this point, I mean, I'll look at it, but I'm probably not going to buy Solana until this starts to revert and come back up. Or I see a big difference in liquidity. So let's take a look at liquidity on Solana and see if there's any reason here to think that we've got strong support. There's not. There's no reason to believe that we have strong support because you just don't see it. So let's see if I zoom out, if we can see anything greater than this. Not really a lot, but our strongest support is really about at this 102 mark. This may be it for Solana at the moment. That's interesting. So, that wick, if anybody bought below 100, you probably did pretty good, but I don't see a lot of buying of large orders in here. This doesn't make me feel confident in Solana yet, at least. I like the level we're at, but I'm not liking the confluence of other things, or the lack of confluence of other things that I like to see in these things. So I hope that gives you a bit of insight on that. If there's anything else you guys want to check out really quick, I'll do it, but I got to wrap this thing up and get on with the day and get back to trading and find my own opportunities so I can make some money in this market. I do think that it's really important to kind of find your spots, find your opportunities, set your stop losses and your profit levels before you execute the trade. Because when it gets into this really spicy volatility like we're seeing, it's really hard to make those decisions on the fly. You're emotional. You're mulling over, oh, is it going to recover? Oh, I'm just going to keep it. I'm going to ride it out. And then, oh, shit, it just dumped on me. So set those parameters when it's not an emotional decision for you. And you're going to find it is much easier to sleep at night, much less stressful for you to trade. Now, some little subtle things to notice in the charts. As I've shared with you many times, if you're reading order book liquidity, if you're analyzing order book liquidity, the simple thing to know is liquidity equals sentiment. And the brighter colors on fire charts represent the highest concentrations of liquidity. So at the moment, the bright spot was way over here when it was 90 million, 91 million way up here. And that is at the moment, looks like it's down to 65 million in that level. The brighter levels are harder to penetrate, but we have some depth here below us, which is good to see, right? So the depth in the chart is good to see on the Bitcoin side. And you see this little stair stepping here? I'm going to highlight it a little bit more, make it easier to see. This is an indication that sentiment is moving up and they're pushing price up a bit. They need to try and clear this, and then this becomes a bigger battle. Will this just be a little exit pump and then dump back down? Mm, Remains to be seen. And I think that how the trade war develops is going to have a lot to do with that. Are things going to escalate like they seem to be in China, or is the rest of the world going to come to the table and try and negotiate better deals? And will China and the U.S. ultimately work something out that is better than the situation that we have now and better than what the situation seems to be pointing to ahead of us? I'm going to look up one more coin here for you guys. How about, um, I know, Matic or Polygon? I still call it Matic, and I chart it as Matic because that chart seems to do. It's got more history than Polygon, and you can see this one also. That 5 and 6 deviation, those deeper deviations, and these volatile markets are good, and that's quick profit, right? So in this market, you can trade and you can invest, and if there's coins that are quality, and I use that term very, very loosely in this market, there are a few that I think have the potential to do something, um, and Litecoin is one of them. Solana is one of them, but there's a lot of noise around Solana. Polygon might be one of them. Let's look at this chart really quick and see what Matic looks like here on the candle chart. All right. To me, this looks like there's still room to go. Obviously, the RSI weekly RSI is buried here, right? So it's getting down to lows. You want to know that there's a recovery, though, right? So that's what we're going to have to look for in terms of this trend here. So this was an RS flip here. Let's see what this looks like if we draw this a little bit differently. If I draw this like so, that's pretty interesting. It just went nuts on me. Hang on a second. I want to do this as a line chart and see how we fare. As a line chart, if we draw this like so, I kind of like it. Well, actually, there's room on this one, my friends. So I think this could be pretty interesting here. If I took it all the way up here, we'd be close, but I think that sacrifices a lot. What's the date of this? August. Oh, this was the Japanese carry trade unwinding. So maybe that is a bit of an anomaly there, right? And if that's the case, then we could go like so and see what this does for us. Now look at this on candles. All right. Oh, look at that. So that's pretty interesting right there. Wicked almost all the way to it perfectly at 15 cents. So that becomes an opportunity in my estimation. Don't have a ton of history here, but you can see we're at historical lows. So what do historical lows? And I say historical. This is just on Coinbase. So this coin hasn't been on Coinbase for a very long time, and it's no longer charting all of the history it had on other exchanges. So this is why I charted as Matic. It's where I got the most history. But this is historical lows here. So this is very interesting here, right? Let's see if there's anything on fire charts with Matic. I think it might be listed as Poly now. Let me see. It is. Let's see. There you go. Right off of support. So this is pretty interesting right here. This may be an opportunity on Matic or Polygon, whatever you call it, at this point. So let's see how we fare here. You're pinned between resistance and support here right now, but in a pretty solid range. What I'd like to see that I don't see right now is buying. Okay, so let's go to the daily time frame and see if this changes much. There's not a tremendous amount of volume happening here. So I want to see more volume before I'm really comfortable with this, but it's nice to see the bounce off of support and off of the trend line here. So keep an eye on Matic. Might be an opportunity there for you guys as well. Lassie. Hey, Keith, I've been in the Army, so not been following crypto market that much. Do you think there's going to be any positive thing on crypto? Well, Lassie, first, let me say thank you for your service, wherever it is that you're performing service. And do I think there's going to be any positive thing on crypto? I do. As I said at the beginning of this, I think that there will be I think there's opportunities here. And I think now's the time, if you haven't done so yet, to find those opportunities, find the coins that you're interested in and look for the opportunities of where you think is a fair place, a fair price for those assets and where they could recover from. Are they going to recover immediately? Probably not, but I do think that they recover ultimately. And what we're seeing right now is a low time frame thing. I think that there's a lot that needs to be sorted in terms of the economy, in terms of this trade war, before we really have clarity on how the trend will recover or not. But I think there's opportunities there, and I suggest that you find them. Alex, do I think that Matic will recover? I do. I mean, it's recovering now at the moment, but this is a short-term thing. What I want to see is more real buying here. And I'm not sure how often. I haven't charted this one in a long time, so I'm not sure how often some of the other classes get involved here. It seems like this is a low liquidity coin, so we don't see a lot of whale activity on this coin. We have in the past. We're just not seeing so much of it now, and we haven't seen any whale activity since February. So, and that was selling. Their last position was selling. So with this coin at record lows at a bottom, I would say, and boom, here comes some suppression in here. So look for a retest of support, and if we establish that and we see some big news, we could see some big recoveries. Lassie is asking, where is Bitcoin resistance level now? Well, the resistance comes in a couple of forms. Let's see. We have resistance at the 21-day moving average and the prior trend line. We have, let's see what it looks like on the weekly. That also takes us to the prior trend line. Let's look at the timescapes, because I think this is what gets, this gets really important to look at these timescapes. Right here, 82.3 is our quarterly open. So I think that's one that we need to watch. This is actually first week, right? I think so. Let's see what it looks like see if it's the same. Yeah, the quarterly open was actually 82.3. So 82.5 actually. So keep an eye on that level, right? And do we break it? If we can RS flip this, then we go after. You see the 21-day has perfect confluence with the trend line. We're coming off of this death cross, which, as you know, I've talked about death crosses a lot. They just seem to carry more momentum, but there will be a recovery, right? Eventually, there will be a recovery, and we'll start to move the other way. So this brings us, all of these death crosses bring us. These are the things that indicate bottoms are near, and so could it flush us into a full bear market? Absolutely. I mean, obviously, this is a bearish trend since things peaked out, but we still have not invalidated the bull market, in my opinion. So we've got some work to do to climb out of it, and when we do, it's going to be grand. So yes, here's your local resistance. Basically, is at the quarterly open, which is also the monthly open, but I might add. But it gets stronger even at the trend line with the 21-day moving average, and then it'll just be level by level, right? We're going to have resistance at each of these levels until we clear them. This is the one that really needs to be cleared. The yearly open. The yearly open is where We have to see an RS flip to really find ourselves back on point with the trajectory that we've been on. This is the yearly open at 93.5, 93.5-ish, I think it was. Yeah, 93.455. We'll call it 93.5. And then the weekly, that first week, was right up here in the 98 range. Actually 102. So this was a high mark up here, right? Interesting. So, anyways, I think that all of these levels are going to act as resistance on the way up. You can see the 100-day moving average is hovering around this level right here. So, all of these things, all of these lines on this chart will act as resistance or support, depending on whether we're going up or whether we're going down. Hope that gives you some clarity, at least gives you some things to think about. And like I said, there are opportunities here. Do not panic. Do not sell the bottom. And you're speaking, I'm gonna give you an analogy that I share with my kids, because if any of you have teenagers, you probably know that in their eyes you're wrong all the time. You don't know anything, or you're just preaching. No. It's none of that. I've made all these mistakes before, and I don't want you to make them yourself. I've been through it. I've been to the school of hard knocks a couple of times, and so. This is the opportunity for you to learn from my mistakes. Hopefully, we all take our lumps in this game. It's never fun to watch your portfolio value decline, but it's part of the game. And just know that these big corrections are part of Bitcoin, part of crypto's history. It's how the asset class trades. Do not panic. Find opportunities. These opportunities I'm sharing with you, and there are many, many others out there that really have the potential to create generational wealth for you and your family. So I hope that you'll take that to heart. Go find what works for you and make some freaking money. All right, guys, going to wrap it right there. I got lots to do. I hope you have a fantastic week. Let's make it a great week. Instead of panicking, look at this as opportunity. Look for deals. Everything is on sale. Time to make money.